Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Everest Industry, a share that has fallen a lot, and let's understand whether you can buy it around 450 levels or not, or whether it is an avoid at the moment. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Everest Industries, it helps in roofing boards, panels and steel buildings and solar panels. So Everest Industry is a building material solution, or you can say a building solution company which helps in real estate. So you set up a building for sure with cement and bricks etc, but you would require roofing, you would require different kinds of boards of wooden etc, panels for your windows, and you can say fancy panels for windows. You require steel on a different side altogether, and of course solar panels have come into being over the last 5-7 years to a greater extent, and there are people or retail players who are putting up solar panels in their homes, whether it is solar heaters or the panel altogether. So Everest Industries help in that. So a construction ancillary firm you can say, and this was incorporated in 1936. So it has been around it's 85 year old company, and it has 6 manufacturing facilities, and they export to 35 countries worldwide. So it's not that they are only working here in India. They have pan India presence, but also exports to around 35 nations all across the globe. If we look at the financials of the company, it has not been that great. There have been a 9% drop in sales, and the profitability of the company has dropped down to losses. So a 6 crore loss compared to an 8 crore profit. Although it has low debt, yet you see that operating profit margin is negative, which you can say NI. But negative operating profit margin and a return on equity of 15% is okay. It's not that it has anything very great to write home about. So 15% return on equity is average, whereas a negative operating profit margin because of losses in the bottom line is worrisome. There is high contingent liabilities for the company, which the company need to take into account and need to take care of. Why has the stock crashed over a period of time? Well, there has been a pressure of global market. So the global market itself of construction and real estate has been under pressure over the last 10, 11 years. It has been a decade since the boom of real estate we have seen globally in Europe and US, and there is a slump in that, although the real estate market is picking up in US and in other parts of the world, but in the Middle East it's not really picking up that well, and similarly in other parts of Asia. So there is pressure on that front. Construction is under pressure here in India as well, as we have seen that the biggest effect of the slowdown has been on the real estate and infrastructure sector, and we have seen how people have been laid off even in good corporates because of that. And not only construction but other domains of the economy has been hit very badly here in India, and that is why I would say that Everest Industries has not been performing that well as it was doing say 3 to 5 years ago. The raw material cost has increased compared to 2015-16 with the higher oil prices. Oil prices were around 30 to 40, $45 per barrel for about a year or 2 years in that period. But now it is around 60 to $65 per barrel, and the raw material cost of metals etc. has also increased over a period of time, and it is not in such a depression as it were say 3 4 years ago. And if you consider the stock market, so Everest Industries being a small cap player has been slammed down as with other small caps over the last couple of years. We have seen how stock has or stocks of this nature have been plummeted out of shape since January 2018, and over the last couple of years we have seen a real you can say slam dunk of the valuations, and we have stocks trading at 3 4 5 times multiples, even though they are doing well. So here we have Everest Industries, which has produced relatively bad results, and so it was pretty evident that the stock would crash, and we have seen that happen as well. And the sector itself is out of favor. So the sector which is doing pretty well during the 2015 to 18 period, the real estate infrastructure sector, after came into being, after demonetization and so on and so forth, things have really slowed down on the ground. And although the markets, Nifty and Sensex, are at all-time highs, but we are looking at a mid cap or a small cap market where things have really not moved over the last couple of years. And the biggest sectors that are losing are auto ancillary, real estate, infrastructure, capital goods. Small cap and mid cap segment of these sectors are getting hurt, so the sector itself is out of favor with investors. If you look at the technicals of the stock, then it is trading at 8 times currently to the trading at 8 times earnings, and it is falling continuously without support from January 2018, as I mentioned. Uh, 200 looks the next level for the stock, because it is trading at around 240 245, and probably 200 is what we are headed to, and that's why you need to be careful. And when the stock is way below its 200 DMA, the 200 DMA of the stock is at 367, then you have to, I would say, completely avoid it, because technically it is one of the, these stocks are the most weakest of the lot, and when the whole market crashes, this could go down even further if the results continue to be bad. We have seen that with other small cap companies. So this looks extremely weak on chart. The 30 DMA is at 268. Wait for 270 272 levels to be taken out before you get into any kind of you can say trading or investment into this stock, and which looks still far away. So wait for a big move on the upside and then get into Everest Industries. So what needs to be done? Avoid for the time being. You have other stocks. There are 5,000 other stocks trading in the stock market. So avoid this stock. This is my personal opinion, and standard disclaimer applies. Let the stock stabilize and go over 270 275 levels. Only then get into the stock, and put only 5% of your total money into such stocks, because if you lose all, then you'll still have 95% of your money intact. I'm not in favor of this sector. The sector as a whole has struggled over the last 11 years. It's not about 2 3 years, but if you look at capital goods, infrastructure, real estate, and its ancillary companies, there it has struggled over time. It has given pop-ups, but you cannot just peacefully invest into it. You have other corporate governance issues popping up in other companies, so you never know what can hit you. So avoid this sector altogether. That's my opinion. So this was my video on Everest Industries. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.